Hello everyone. Here's another scenario of adjustment that accompany sales and cost of sales. The thing is just have a bird's eye view or the kind of analysis whereby what adjustment and which exact accounts do they affect. Right, you are provided with a pre-adjustment balance on 28 February 2018. Data's control is given 961,000, trading stock 962,600, sales 11,791,200, cost of sales 8,310,660, then packing material 24,000. Then your adjustments. A customer was issued with a credit note. Right, this is a customer for 1,206 on 24 February 2018, and your year is ending on 28 February, and this was omitted from the journals. The markup is 50% on cost. Right, then a physical stock count on 28 February 2018 revealed the following: trading stock 962,800. Right, then packing material used in the financial year amounted to 23,000. Then a debtor, Mr. M. Spark, was declared insolvent. Right, so this is a debtor declared insolvent, received 45 Rand as a first and final dividend. Right, final dividend 40 cents in the Rand as a first and final dividend 40 cents in the Rand. The balance will be written off. Then on 24 February 2018, 2,400 was received from C Queen, whose account is probably been written off as irrecoverable. The amount was entered in the debtors column of the CRJ. Right, so these are the adjustments that we need to make. Right, taking them one by one. Right, this one here, the 45. Right, so you will have your sales of 11,791,200. Right, then the first adjustment that you need to make is this one. Right, we're not given data allowance, so that's minus 1,260. That reduces your sales. Right, then the second adjustment, and that's the only adjustment that we need to have on sales, because that's for the customer. Physical stock has nothing to do with that. Packing material have nothing to do with that. Right, right, so I close this one off. Then cost of sales. A cost of sales that will be 8,310,660. Right, minus as well, we need to remove this amount. Right, so how do we calculate that? That will be 100 over 150 times 1,260, and that will give you that's 100 divided by 150 times 1,260. That will give you 840. That will give you 840. That's for the debtors. Right, then once you get these figures, what I have here is 11 million 11,791,200 minus 1,260. This will give me 11,789,940. Right, then my cost of sales will be 8,310,660 minus 840. This will give you 8,309,820. To subtracting this minus 11,789,940. This will give you a gross profit of 3,480,120. Then that's your gross profit. Then other incomes. Right, I'll just do the one that we have here. Right, you see we have this one here. Right, trading stock. Trading stock according to StockTech is 962,800, but according to the books, right, it's 962,600. So there is what we call trading stock surplus. That's 962,800 minus 962,600, which gives you a surplus of 200. And then we have bad debts recovered. Bad debts recovered, this will be this amount 2,400 because on 25 February 2,400 was received from Sequin, whose account had been previously written off as recoverable, right? But there was a wrong entry that was made that we were going to adjust, so that's 2,400, right? Then we need to have expenses, right? Expenses. Let me write expense, then I'll adjust the other one. Then on the expenses part, we've got bad debts. Right, we don't have any amount of bad debts, so just include the one that we're calculating here. Bad debts. At bad debts, it comes out of this amount here. At 45 Rand was received as first and final dividend of 40 cents in the Rand. So we want this 16. So what we're going to do, we're going to say 60 over 40 times 45. Right, that's 60. 60 divided by 40 times 45, which gives us let me just change this to 650, right, which gives us 67, 68, yeah, 68, right, so that's 60 over 40, right, 60 over 40, right, then that's the return of, right. Then packing material. Packing material just come here as packing material. That will be 23,070. Right, will just come as it is, right. because the amount that you are given here, the difference will form part of the inventory, not 4. Right, then let's make the adjustment that we need to make in terms of datas. Right, so our datas right will be 161,000 minus 1,216 minus 68, this one here, plus this amount here. Remember, it was posted on the data control column in the CRJ. Once you post there, that means it's a deduction. So we're not supposed to deduct that amount, and plus 2,400. That will give us the adjustment on our data. Then trading stock, when you go to note number 4, trading stock, you include this amount here, the one that are given in the notes, 962,800. These are adjustments that need to be aware of, right? Once you have an adjustment regarding a credit note, additional returns, they will adjust your sales as same as adjustment to your cost of sales. So you reduce your cost of sales and reduce your sales. Please, if you like this presentation, please do subscribe and like the video as well, and share with others, and please turn on your notifications so that you don't miss any new uploads. Thank you.